that there are two networks, right? In the ACH, there's the clearinghouse network, and then there's the Fed network, right?
So payments, really to me, a lot of times when we talk about payments, we put a cloud on the PowerPoint. To me, payments is a Swiss Army knife. It's got a number of rails and a number of blades that serve a number of different purposes, whether it's credit card, whether it's debit card, and then there's check clearing, ACH, and wire transfer. In those blades, check, ACH, and wire, you have a private sector and a public sector. And they've been competing against each other in the case of check ever since the Fed was established.
And Mike, Tom mentioned that the clearinghouse has developed a real-time payments network. Can you describe sort of the timeline of how that came about, how that decision was made to create it, and how it works?
Sure. I mean, the timeline is kind of very public, but it kind of got started because people view the U.S. as being behind, that there are other countries who have been able to move much faster towards real-time payments. There are other countries that do a much better, kind of more tech-focused way of moving money with mobile payments and other things like that. Part of that's the infrastructure. Part of that's the number of banks we have in the country, things like that. But as part of kind of moving that process forward, the Fed convened a group, Faster Payments Task Force. The Fed convened a group, Faster Payments Task Force. The Fed convened a group, Faster Payments Task Force. Part of a way of getting everyone in to be able to talk about, you know, what a new system should look like, what should be the goals, how do you bring everyone together to do that in a way that doesn't create kind of antitrust problems and brings together everyone who's involved in that process. They set out goals, they set out metrics that they wanted to achieve, and then as part of that, the clearinghouse banks got together and put a proposal together, started building a system to meet the goals kind of laid out by the Federal Reserve and, you know, customers and others, right? It's one thing to have these goals that were set forward as kind of principles at the Fed, but really this is about driving a change that you know is due, is something that customers demand, and we need the infrastructure there. Is something that customers demand, and we need the infrastructure there to do it.
And how much reach does the RTP network currently have?
So I believe currently, I mean, the most recent stat I've heard is over 50% of the demand deposit accounts. So the reach is one thing, the use and the volume is another. So
there's different ways of kind of
measuring metrics, how much, right? And you could measure dollar volume and other things. And to Carrie's point, it's a Swiss Army knife in terms of payments. There are still competing ways of spending money. If you're comfortable sending money that gets batched, or you're comfortable using checks, and you don't feel the need to move towards a real-time payment, then you might not move your volume over there yet. The reach is growing. The reach got advanced this week with Jack Henry signing on or going live onto the RTP system. That brings the reach that it has to other community banks, smaller banks. The clearinghouse banks are all connected, but then it's about...
From our standpoint has always been, we want every bank to have this blade, the opportunity to access this blade in the Swiss Army knife. And it's not that we want a monopoly from the Fed or want a monopoly from the clearinghouse. We want choice.
A structure, they're taking comments on what it should look like, what features, things like that. I think that some of the anecdotal evidence is that there are some banks who have viewed the 4 to 5 year timeline as being too long, and that they've gone forward and either started the process of joining the RTP network or made a decision to, again, either wait or join. A lot of that will, again, be driven by customer
I serve on the RTP advisory group for the clearinghouse. And two, we really think it's a legitimate choice. If, you know, there are several of our bankers that are ready to do RTP or feel like they're large customers, and I do think businesses will drive this. I think it's going to be commerce that drives this more than P2P. In that shouldn't be the model that we go with, but the wires happened even though those services were not interoperable. It did not become a real-time payment or not become a wire transfer because of that. And I think that's going to be our crawl step into a crawl, walk, run.
Only really makes sense if these networks are interoperable, which is where, which is a kind of big question, right? Like whether these networks can be made interoperable. I guess, Tom, what do we know about interoperability of a Fed-operated network and
So
RTP?
the Fed has come out saying that the day one FedWire will not be interoperable with any private system. I'm not aware of any government-sponsored real-time payments platform that is actually interoperable. Famously, the European version is not. And this lack of interoperability means fundamentally that it's not a real-time payments platform, instantaneous. So that, I think, is going to be a key issue when the Fed does introduce FedWire. And it's fun, just to draw that out a tiny bit more, to talk about having a choice between the private and the public offering. But realistically speaking, most banks will have to adopt both services, because they have to be able to reach their customers wherever they are. And if the two different services can't communicate in real time,
some banks would. I mean, if you look at wire transfer as an example, wire transfer does not have interoperability between FedWire and ChipsWire. However, wires get to folks. Some banks have joined both, but many banks have just gone with one solution or the other. Is that the most desirable outcome? I would agree with you that it's not. That shouldn't be the model that we go with. But the wires happened even though those services were not interoperable.
Right.
Economically, it doesn't really make sense to have two long-term, right? Is that?
Correct. I mean, our position is that there
have
should be
to
one, there
happen
should be
through
ways to
mandate.
address.
It's going to take a long time if it happens. The first step you have to have is have some sort of critical mass. And by that, I don't mean just mass of deposit accounts, but really a good portion of community banks, credit unions, coupled with those big volume banks. And that's the first step that we really have to look at before we talk about anything like mandates, and our work is cut out for us. It's moving to unprecedented space to have a settlement monopoly on any payment rail.
But there's, of course, nothing preventing any other private firm from
They
creating
are not
its own
good
network.
at creation. No. And it may take the clearinghouse and the Fed to go into a room, come up with draft 1.0, then pitch it to the industry rather than rules and standards groups. Again, they're great at maintaining things, but sometimes that type of, dare I bash democracy, but that type of democracy just doesn't work when you're trying to stand something up quickly.
Ed Hill, you guys talked a lot about the benefits of competition, and you talked about the benefits of interoperability. But aren't there real costs to interoperability, namely competition and innovation? How can you have two systems that are completely interoperable? If one of them wants to make an innovation, do they have to wait for the other to catch up in order to have that interoperability? So I wonder if you talk about some of the perhaps downside of interoperability of the two systems.
What do you think, Mike?
I think it's a great question. I think one of the things that, and I'll want to hear Carrie's thoughts as well. I'm sure all of you do as well. When we talk about the benefit to real-time payments, I think everyone immediately jumps to speed, right? And what's better than speed? Once we have speed, we're arrived. But the broader benefits and the broader promise of real-time payments is not just that, but it's all the things that are going to go on top of it. So these are rails. What are the things that go on top of the rails? So where are you going to be able to, again, from your phone, pay instantly to your plumber, or when you pay your plumber, is he going to be able to do that by sending you a message that has a photo of his work being done, and so I'm at work, I can make that payment when I'm done. I think the question around whether those things, whether one moving faster in terms of adoption of new products or new services changes the interoperability equation, I think is worth noting. I think people, again, our general sense is that the Fed would move slower than TCH would in terms of adding new, kind of what they would view as customer responsiveness. The Fed has to kind of, again, by nature of being a government entity, they can't just say, oh, these guys have a real cool innovation, let's go slap it on. it seems like that process might be a little different for them than TCH. And again, whether that impacts the ability of that payment to go through, I think seems to be a reasonable question. But again, it seems like there's a lot on interoperability that needs to be.
Yeah, we have, if your municipality, if your hospital, if your town, county government, or your utilities want to send you money that way, you can't tell those customers that they can't receive it that way. And banks are going to have to look at that.
And that's exactly right. The business B2B side or maybe B2P side is again where I think a lot of this goes, because in the cash analogy, there are places where I might not want to send a real-time payment to Carrie if I don't know him or if I'm purchasing something from him online. But there are lots of places where, again, if the I want to make sure that my utility company knows and has verified that I've paid them, because I want to be able to keep my lights on or keep my cable on. Those things are going to kind of drive that adoption, we think, and drive interest in it. And again, at this point, outside of the policy discussion, the timeline seems to be what it is, and the market will drive a lot of this decision around whether more adopt. And then I think that's the other kind of question for the Fed as they move forward is, what market are they stepping into? If they could kind of, again, flip a light switch and be there today, the product might look a little different than where they come in 4 to 5 years. Yeah. And lots of other kind of aspects of that as well, as like how they attract volume and other things.
Well, and that sort of choice of payment provider